Picture this. You buy something online, and just inside that merchant's app, you're offered a loan, insurance, or even a bank account, all without ever visiting a bank's website. No transfers, no switching apps. That's not science fiction. That's the fintech revolution that's already happening. And if you don't realize what's changing, your money, your privacy, your future could be under a threat you never saw coming. I'm from Smart Wealth Academy. Today, we are diving deep into embedded finance, open banking, and digital-only banks, how they're tearing down the old guard, building new power in the shadows, and what you, the consumer or investor, need to know right now. Stick with me by the end. You'll understand why traditional banks are racing to adapt, and whether these changes will benefit you or cost you. So, what are these disruptors? Let's break it down. First, there's embedded finance. This means financial services are integrated directly inside non-financial platforms. Think of buy now, pay later options that pop up when you're checking out online, or lending and payment options right inside your ride-sharing app. It's about putting insurance or credit exactly where you already are. Next is open banking or open finance. This is where banks open up their systems through APIs, allowing third-party providers with your consent, of course, to access your financial data. This enables apps to gather all your accounts in one place, give you personalized insights, and offer you tailored financial products. Finally, we have digital-only banks, or neobanks. These are banks with no physical branches. Everything happens through an app or a website. They often have lower costs, a better user experience, and are much faster, and the numbers are staggering. The embedded finance market is expected to hit $230 billion by 2025. Around two-thirds of companies are planning to integrate these services in the next year and a half. Meanwhile, the use of open banking APIs is growing by about 64% annually. Let's look at some real-world examples of this disruption in motion. You've definitely seen by now pay later services built into the checkouts of major retailers like Amazon or platforms like Shopify. Ride-sharing and mobility apps are embedding payments and even insurance directly into their user experience. We're also seeing business software platforms offer lending services right inside their dashboards, like providing invoice financing or working capital loans. And of course, there's the explosive growth of neobanks. Users are flocking to them for their slick mobile interfaces, lower fees, and incredibly fast onboarding processes. The days of waiting in line at a bank are quickly becoming a thing of the past for a new generation of consumers. So, why is this so powerful? What's driving this massive shift? The biggest factor is removing friction. Traditional banks often make you jump through hoops, endless paperwork, long waits, clunky websites. Embedded finance gets rid of all that, creating a streamlined, seamless experience. For the companies, it dramatically lowers their customer acquisition cost. They already have you as a user. Adding a financial service is far cheaper than a bank trying to win you over with expensive ads. Then there's personalization. With access to data through open banking, companies can tailor their offers, assess risk, and offer credit with incredible precision. This means more relevant products for you and less risk for them. And don't forget regulation. In many countries, policies are actively pushing for open banking, accelerating this trend. For the companies integrating these services, the revenue upside is huge. We're talking about a potential 3.2 times increase in customer engagement and up to a 45% boost in revenue. But it's not all smooth sailing. There are significant risks, challenges, and hidden costs. First and foremost are regulation and privacy. Handling sensitive financial data is a massive responsibility. It requires ironclad security and clear consumer consent. One slip-up could lead to data misuse, and regulators are watching closely. In fact, some regions are already rewriting the rules on open banking to tighten security. Then there are trust issues. Will customers really trust a non-bank with their financial life? Questions about liability, who's responsible in case of fraud, and data security are all valid concerns. There are also operational risks. Integrating financial services adds a lot of complexity for a company. They suddenly have to worry about fraud detection, credit risk, and regulatory burdens. And let's not forget the old guard. Traditional banks have regulatory muscle, established trust, and deep pockets. They're not going down without a fight. They will adapt or push back hard. So, as a consumer or an investor, what should you be watching for? Here are the key signals. Pay attention to the platforms you use every day. Are your favorite apps starting to offer payments, credit, or insurance? That's embedded finance in action. Keep an eye on new open banking and data sharing laws. The decisions regulators make will determine who wins this race. Watch for partnerships between fintech startups and big non-financial companies. Software firms, e-commerce giants, and major tech players are all getting in on the action. And keep track of innovation from Neobanks. New features like virtual cards, instant transfers, and superior user experiences are setting new standards. Finally, look at the revenue and engagement metrics. See which of these embedded finance offerings are actually making money and not just a flashy add-on. This fintech disruption isn't coming, it's already here. Embedded finance, open banking, and neobanks are quietly transforming how we spend, save, borrow, and interact with money. For many of us, banking will no longer be a separate place you go to. These services will follow you everywhere in your apps, your rides, your shopping, even your healthcare. So here's what you do. Start noticing which apps are already embedding finance, which platforms are asking for your financial data or offering you services. Follow those moves. If you want to stay ahead, not just survive this change, but profit from it, hit that subscribe button. I'll be following every regulation, every partnership, and every new feature, breaking down what it means for your money. Drop a comment below. What embedded finance feature do you use already, or which one do you want to see? Let's talk. This is Smart Wealth Academy, signing off.